Hey, what's going on, guys? Aaron here. In this video, I talked with Laura over at Crypto Tax Girl, talking about everything Celsius related, whether you should claim if this is a Ponzi loss or a normal capital gains deduction, and basically going over many scenarios, and hopefully you fit into one of them, to help you understand more about what's going to happen with your crypto taxes, and especially with Celsius. So I am personally using her for my crypto taxes, and so far the experience has been incredibly easy and professional, and I would highly recommend it. If you do decide you want to work with her and her team for your crypto taxes and just taxes in general, they are CPAs. I will include her information below. You can email her directly and just say you want to get started. There's also a way to do a 20-minute introductory call if you do want to go down that route as well. We do talk about this in the video, but I just want to let you know up front that her firm is incredibly professional and they're not some bargain basement firm. She does charge $500 an hour. So if you have like $100 in Celsius and you have nothing else going on in your life, probably wouldn't make a lot of sense to hire her. But if you have thousands of dollars of losses on Celsius, her deep understanding about how to deduct those losses and how to save money on your taxes could end up saving you quite a bit of money, making her fee well worth it. And I will add that she is opening up her schedule for 50 of the first people that do decide to work with her that come from my video. She's super busy, and this is a very, very busy time for her. And if you reached out to her otherwise and just said, hey, can I work with you? I believe she would say that there is a wait list and or she can't work with you. So if you know you want to work with her, I would encourage you to reach out to her directly through her email or schedule a consult. But if you already know you want to work with her and you just want to get on that, I would suggest sending her an email. And also, if you let her know that I referred you, they are going to take off $100 from their fee. So I will include all of her links below, including a way for you to ask questions, because we will be doing more videos in the future. So without further ado, here is my chat with Laura over at Crypto Tax Girl. All right, so welcome to the video. Thank you, Laura, for coming on. So I just wanted to hear a little bit about how you got into crypto taxes, and also what your firm does, and then I'll hand it off to you to talk about everything Celsius taxes related.
Great. Yeah, I'm so excited to be on here. I've been following your videos for months, keeping track of the Celsius thing myself. And so now that we're finally here, we have the price, we have the percentage of the distributions. I'm excited to finally talk about the numbers. But yes, I guess first, just a little bit about us in case nobody knows who we are already. I got into crypto in like 2014. I was still in college, and I had a professor who like loved Bitcoin, and we had to write a paper in our class about Bitcoin and whether we thought there was a future for it or not. And then, so I was like a poor college student. I barely had anything, but I became exposed. And then over the years, me and my husband started buying, a little more crypto. Again, we're like straight out of college. We were not rich, but as we know, like buying a little bit then turned into a little more now. And so in 2017, during the big run on Bitcoin, we were able to sell some crypto and, made some profit from it. And after that, we were trying to do our own taxes. I ended up quitting my job from that, and we moved abroad to travel. We were doing our own taxes, and we're like, okay, if like I'm a CPA and I have no idea how to treat these gains, losses. I mean, there were gains, but like this new income that we have, how do we report this on our tax return? How is like the average person going to figure it out? So I like went through all the tax code that was available at the time. In 2017 is very little. I mean, it's not like we have that much more now, but even then it was less. And so I'm going through all the tax code trying to figure out, and I was like, this is confusing. So I started a Twitter account where I would tweet out crypto tax tips. And that, luckily, I mean, timing, first mover, I think we were the first people in the US to start talking about crypto taxes. All of a sudden, people are like, oh yeah, like I didn't even realize I needed to pay tax on that. There was a ton of people in 2017 who like barely made anything, and all of a sudden they were like millionaires, or making at least hundreds of thousands. And so a lot of people were needing help, and I just got lucky with timing, and so started this crypto tax firm. Also prior to this, I was working at EY. That was the job that I quit to travel. So I was a CPA. I had experience in taxes, and decided to run with crypto taxes. And now, like 6.5 years later, we're still doing it, and our team has grown. And That's all we do all day, every long is crypto taxes. We do crypto gain and loss reports, income reports. We do tax returns, tax advisory, tax planning, anything in the world of crypto taxes we handle.
Well, you guys are actually helping me with my taxes this year. And so far, the process has been very, very, not only easy, but also just very personable. It's not just like upload it to a website and good luck. It's very hands-on. So
good. Yeah, we try to aim, like, I know there's a ton of other tax firms now. Well, not a ton, but there's other people that do it now. But I started with, teaching people on Twitter and like teaching them how they needed to do their crypto taxes. I started with a crypto tax course. And then after people were like, okay, I took the course, so now can you do it for me? But I've always been about like trying to teach people more complicated topics on a more easy to digest way. And so I'm glad you've been feeling that. And hopefully after people watch this video today, they feel the same, because the Celsius stuff is a little complicated.
So dive into however you want to start talking about the Celsius saga that we're all in.
Okay, so first off, I just want to say, like, I know you guys have lost a lot here. Like, if you're watching this, most likely you've lost something in Celsius. So I have been researching. I have lots of clients who have as well. So I've been researching this a lot, trying to figure out how we can make the best of like a bad situation here. Take some sort of loss on your tax return. And it's very complicated, but I'm going to do my best to try and explain it simply. So I'm going to get into all like more of the details below, but just like in case you're not watching all the way through, the first thing that you should know is that there's two types of losses that you can take, and one of them needs to be taken this year, which means you need to make an election for it on your tax return for 2023. So this is 2024, we're filing for 2023 right now. So this election needs to be taken on your 2023 return, and like the tax deadline is 2 months away as of right now filming this. And so we need to act quickly. We either need to file your tax return before April 15th so you can take that type of loss, or you need to file an extension. Even if you take the other type of loss, actually filing an extension might be beneficial. I'm going to get into the details, but just know that if you have Celsius, I've talked to a lot of people recently who are like, oh yeah, the distributions are coming in 2024. So, I don't need to worry about it till next year, but I'm just kind of getting ahead of it. But if you take one of the losses, you actually need to do it this year. So we need to, keep that in mind and act quickly if you can. Like Aaron said, I'm like opening some slots to get it done before April 15th. We'll try and get as many of you in as we can. But even if we can't, reach out as soon as you can so we can get an extension filed, which will give us until October to file your taxes.
That's interesting. So I didn't know that up until you just told me that right now, that there are certain people that actually would want to file something specifically for Celsius in the next 2 months or this year.
We'll get into it. So I guess Let me just go over a summary of what I'm going to talk about, and then I'll talk about how you determine which one you'll be in. So summary is I'm going to talk about those two different types of losses, and also some people that actually might have gains, which that's not fun, but you might have some gains actually here. And then talking about when to take the losses, the timing. So like I said, one of them is this year. Another one is actually next year. Both of them might be the year after. So we're going to talk about the timing on the losses or gains. Again, the factors you need to consider to determine your loss, like personal situations that you need to factor in. And then also like things you can do now to get ready for it, like stuff you can start gathering. And then just because this is all kind of teaching you and it's going to be hypothetical, I'm going to walk through some examples that will show you like the actual numbers, and like you can kind of see what bucket you might fall in and hopefully relate to one of those numbers. But just before I get in, like quick disclaimer, this is super complicated, and I'm sharing what I've researched and like what I think is the right path here. And I am a CPA, but like the IRS has not spoken about it. Celsius has said that they're not going to give any tax documents for this. And then on top of that, there's so many personal factors that like factor into which one is the best, like your income, your gains, your marital status, your filing status, your capital losses from previous years, your other crypto activity, like whether you filed amendments in the past. There's so many things that we need to consider when determining which method will be best for you. So I'm going to walk through some examples and hopefully that'll help you kind of determine. But also, I would really recommend like reaching out to us if you are unsure, so that we can help talk about your specific situation and make sure you end up like going down the right path here, and that we take things in the right timing in the right year, especially if there's big numbers involved. I guess quick disclaimer there. But okay, so first off, can you take a loss? That's everyone's question. I've lost money on Celsius. What does this mean for my taxes? So quick answer, most likely. but maybe not. It could potentially end in a gain. So the reason being is that your loss that you can take is limited by what your cost basis was in your coin. So I know that's like, tax word here. So cost basis, what is cost basis? Cost basis is what you acquired your coin at, the value of the coin at the time you acquired it. The most simple example is if you bought it with US dollars. That's super easy to track. If I bought one Bitcoin with 10,000 US dollars, my cost basis is 10,000. That's super easy. But like if you acquired it via trading, like selling one coin and then you bought another, what was the value on that day? That's your cost basis. Did you also receive it, if you were on Celsius, you could have had the interest income that you've been receiving, like the rewards. Every time you received a reward, that's a different cost basis because the price fluctuates every day. If you're receiving this in Bitcoin, let's say you're getting 0.001 each day. Some days it's more or less depending on the price of Bitcoin. If you received it as a gift, if you received it as income, like there's so many things that make up your cost basis. And knowing that number is extremely important. So that number is where the crux of all these calculations fall upon, is your cost basis. So again, if you bought Bitcoin on Coinbase, transferred it into Celsius, and then you lost it there, that'll be so easy to know your cost basis. But if this is Bitcoin that has been, or any coin, acquired, transferred. I mean, we have so many clients. They bought it here, transferred here, sold a portion of it here, staked it here. Now it's in DeFi. Now it's like, okay, what's the cost basis? Like that's what we spend 99% of our time doing, is helping people figure out their cost basis so that they can create their crypto tax reports at the end of the year. So you got to know your cost basis. And all of that whole tangent was to say that the amount of loss that you can take is limited by what your cost basis is. So if you have one Bitcoin on Celsius and you bought this back in, when I did or something, $1,000 per Bitcoin was your cost basis. The most amount of loss you're going to be able to take here is $1,000. So you're limited by your cost basis. It doesn't matter that at the time of bankruptcy, that one Bitcoin was worth 20,000. It doesn't matter that now it's worth 40,000. Unfortunately, you're limited by what your cost basis was, because those other numbers are considered unrealized gains. Like they were up. This Bitcoin was up, but it's unrealized. The realized amount is only that 1,000. So all that to say, you got to know your cost basis and you're limited by that. So if you have a really low cost basis, there is a time that you actually could end up with a gain. And that is if the amount of distributions that you receive are higher than your cost basis. So you have that $1,000 cost basis Bitcoin. All of a sudden you're receiving these distributions that are worth more than $1,000 total, even though the total amount doesn't, if you add it all up, factor to one current day Bitcoin, it's more than your cost basis, so you might have a gain. It sucks, but that's kind of part of the reality there, unfortunately. But if you actually did have a loss, so basically if you've bought crypto higher than the petition price, plus also we're not getting back the full crypto. So even if you had the exact price as the petition price, you're not getting back 100% of it. You're only getting back like 70-ish with the current distribution percentages. So if you have bought it at higher than petition price or even around, most likely you'll have a loss. And there's two types of losses. So we're going to talk about both. So one is capital loss. This one is probably one that if you're in crypto, you're familiar with this. This is anytime you sell, trade, or spend crypto, it results in a capital gain or loss. And so if you lost something on Celsius and you got $0 back, so basically whatever is left over at the end of the day that you don't end up getting back from Celsius, that will be a capital loss. But and I'll show you how we calculate that. But the downside is that capital losses are limited to $3,000 of net loss per year. So if you have a $100,000 loss and no other gains to offset it, you'll take $3,000 this year, 97 the next year, and it just keeps going indefinitely until you run out of 3,000 or until you have a gain to offset that loss. So, I mean, the next year you could have another $100,000 of gains, and then all of a sudden that loss can all be used up. But if not, let's say you're like, I'm done with crypto. I lost everything on Celsius. I'm not touching this anymore. That 3,000 is going to keep going unless you get gains from, mutual funds or stocks or real estate. You can use other capital gains to offset crypto losses. That's how capital losses work. That's one type of loss. The second type of loss that you can take is one that you would want to consider if you have a loss bigger than $3,000. So again, that loss is limited by your cost basis. So if your cost basis is bigger than $3,000, then you might want to consider this type of loss, which is called a safe harbor Ponzi loss. So this is not very common. You probably never even heard of this. I know some people on Reddit have been throwing it out, so maybe you have. But regardless, it was put into place in 2009 after the Bernie Madoff fraud in 2008. And it's a way for people to deduct theft losses from Ponzi type investments. So in this case, this is what happened with Celsius. But before you can take it, there's a few stipulations. So one, you can't amend your previous year's returns to remove Celsius gains or income. You can only deduct 75% of the loss initially, and then you deduct the remaining portion once the case is finally settled. So whenever that is, next year, 10 years from now. You need to make an election in 2023 and file it on your 2023 return. So again, this is, I was talking about the two types of losses. There's one that's more urgent. If you're going to take this, it's more urgent. We got to take it this year in 2023, either before April 15th, or you need to file an extension to take it before October 15th. Also, the other thing to note on this one is that a safe harbor Ponzi loss is an itemized deduction. So if you're not super familiar with taxes, on your tax return, at the end of after you list all your income, you have either an itemized deduction or a standard deduction. And a standard deduction is available to everyone. If in 2023, if you're single, it's $13,850. If you're married, $27,700. So everyone's entitled to this, but you also are entitled to an itemized deduction if you have deductions larger than these standard amounts. So not a lot of people qualify for these, but some do. If you own like a home, that could potentially push you past the standard deduction with mortgage interest and property tax. If you have significant charitable contributions, that would also push you. There's a few other ones, but those are kind of the two main big ones. It is an itemized deduction. So even if your loss is bigger than $3,000, but it's less than the standard deduction, then most likely it's still better for you to take the capital loss route. But those are two things to, kind of consider there when weighing the options. So those are our two types of losses, and hopefully you're still with me. If so, I'm going to talk about when you can take the losses. So again, I kind of already talked about a little bit, but so for safe harbor Ponzi losses, the revenue or the proclamation that we have, the RevProc, it defines the year of discovery as the year that you have to take the loss. And so what is year of discovery? Some people are like, is this 2022? Because that's when it shut down. So even though it happened in 2022, the actual year of discovery is 2023 because they define that as the year of indictment. And Mashinsky was indicted in July 2023 for securities fraud, commodities fraud, wire fraud, conspiracy, market manipulation. So they say because it was determined that this was a Ponzi type investment and that there was fraud involved, 2023 is the year that you actually will take the loss. And so if you take the Ponzi loss, 2023 is the year you take it. And again, you take 75% of that loss, which I kind of talked about before. And then years after that, you'll take additional loss or income depending on what you get back. Capital loss, nothing that you need to do this 2023. So if you're filing your 2023 tax return and you've already kind of determined capital loss as the route that you're taking, nothing you need to do this year, but it's still good to prep, obviously, and get your cost basis and everything figured out so that it's not a big surprise to you next year when you file your return. But nothing to report in 23, but you will report a gain or loss in 2024 for the forced liquidation of a part of your assets that you were holding, like your claim for what you receive back in the distribution. And then you're going to report additional gain or loss in 2025, depending on what you get back relative to your cost basis again. So,
wow.
And this, I guess 2025, assuming everything wraps up next year, I know they're going to do the second round of distribution if people don't claim, 1 year away, but they also, you might get more in the future. Who knows? It's still up in the air. You might get nothing. Yeah. I'm not crossing my fingers, but we'll see.
Safe harbor Ponzi, there's been talks about that. Can we do it? Do we have to wait until Celsius is officially declared a Ponzi? From your knowledge of being an expert on the tax code, the fact that Mashinsky was indicted for certain crimes is enough for people to take that.
Yeah, most likely, yeah, or losses.
Losses,
if you have gains larger than the standard deduction, then most likely that would be beneficial for you.
That's
But
really
there's so many other things to consider. Do you have other capital gains? I mean, I will say with the Ponzi loss, and I'll talk about this more, but it is more risky. Like taking the capital loss, kind of easy, whatever, it's just going to go on your 8949 where all your other crypto activities going. The safe harbor Ponzi loss is not something common that the IRS sees on returns, and you have to make an election for it. You have to say, I'm not going to amend any of my previous year's returns. I'm taking this big loss up front. I might have income or loss in the future, but it's more involved for sure. But it also has a lot bigger opportunity to deduct a loss. So if your numbers are big enough, it's totally worth considering, but just know there is more risk with it. So if you're I could go either way, go for capital. But if you it's significantly different to do safe harbor Ponzi, I'm going to definitely recommend that. We've already done it for a few clients. So yeah.
And again, there's so many variables with your other income, real estate, how much money you make. It just sounds like it's very personalized as to what would make the most sense.
I know most crypto things I can kind of give blanket statements and, this is kind of how it's treated. But this one, it's okay, how much time do you have? I need to ask you 1,000 questions to figure out which one's better. So if you book a consultation with us, I'll make sure we go through all those and help determine. But again, it's even if I have all the facts, the thing that's most important is that cost basis. So I could have all the facts in the world, but now I need to know what your cost basis is to figure which one's better. So if you don't know it, we'll help you calculate it for sure.
And if you've been involved in crypto and we've done DeFi, I found that to be really difficult, even with some of this online software, to really figure out my cost basis, especially, my gosh, you just move the same coin and you 1,000 times. You're like, what? Where did it start?
If you miss one piece of the puzzle, then all of a sudden everything gets messed up, and you go to pull the final report, and it's we're missing this cost basis, we're missing this, and you're right. I don't know where it is. I can't find the hole in the data. So we help identify the holes, clean them all up. Yeah, we love being in the blockchain and in the weeds on APIs all day long. So
I think that's why a lot of people they open up one of these tax softwares and then they upload their CSV files and they're like, there's a hole. And then they're just like, screw this. And then they just don't do it and complete it.
Or people just okay, well, Coinly doesn't work. I guess I'll try coin tracking. And then they put everything in there let's screw this one. And then they move to the next. Yeah. And they just put everything in. And some of them will make assumptions for you. So you'd be like, oh, that looks better. But the assumptions could totally be wrong. So there's totally benefit to the crypto tax software. We use it ourselves, but there's also risk in having it wrong. And a lot of our clients have come to us who've maybe calculated their own in the past, but they're like, hey, this year I want you to take care of it. And then we're like, okay, we took care of this year. Also, the last few years were messed up, so we need to fix that. But I had a client recently who did it himself, and he reported $2 million of gains, and then we did it for him, and it was only $1 million of gains, so he got a $500,000 refund. So that was big. I mean, our fee, it's not cheap, but transparent, we charge $500 an hour. But usually, what you pay us, you will make up in tax savings. Obviously, if you just have a few $100s and it's not going to make up, but for any sort of thousands of dollars here, this is totally going to make up for it, in my opinion. But especially with losses, because it's if you just take the amount of loss we're going to take for you and then times that by your tax rate, let's say it takes, let's say it takes 5 hours. So that's $2,500 is our fee. But we can get you a $50,000 loss. And with that loss, let's say you have a 20% tax bracket, we'll save you $10,000 in taxes and you'll pay us $2,500. So in the end, you're still saving $7,500 by working with us. So quick calculation, quick side note. But anyways, I mean, you're working with us. So as far as what you're going to need to determine your loss and things you could start thinking about now and gathering. So one, you need to know whether you're in custody, earn, or lend. You probably already know that, but that's obviously a huge consideration because each of them are going to be treated differently. And then two, you need to know what your claim amount is. You guys know you can go look on that PDF and see everyone else's name along with yours. So there's, you take that times that by the petition price and there's your claim amount. And then you need to know your cost basis. I've talked about that enough. You need to know your cost basis. And then the other things to consider, what's your filing status? So is this single, married, head of household, whatever. And then what other income do you have that year and next year and the year after? Because this is going to impact multiple years. So What's your income in 23, 24, and 25? All of those are relevant. What are your capital gains? Same, all 3 years, and the timing of them. You obviously aren't going to know what your capital gains are for 24 yet. You have no idea what they are for 25. So this also could be a good reason for an extension, because as we get closer to October, you'll have a better idea of how 2024 is going to look from a capital gain perspective to help you figure out which loss would be better. If you end up having a ton of capital gains this year, which you might, I mean, the market's up. If you end up having a lot of capital gains this year, even if you have a huge loss larger than the standard deduction, could still be better to do capital because you could offset all of those this year with your capital gains. So something to consider, the timing on those. And then also, like, do you normally itemize? Do you normally take the standard deduction? Because if you're already itemizing anyways, then it doesn't matter if it's higher or lower than the standard deduction. You already know you're in the itemized category, so you just add that on to your itemized deductions. So yeah, there's all sorts of things to consider. And I've talked about kind of so many, like, it's kind of been vague. So I want to try and give you some examples now and walk through some slides that I sent Aaron and show you how this could actually apply to you. Okay, so we're going to start here with person A. I'm trying to make this as simple as possible to follow. So this person has $100,000 of income. They're single. They have a high cost basis. So in this case, $55,000 per Bitcoin. And they had 2 Bitcoin on earn. So their claim is the earn times the petition price. And in this case, I'm assuming that they didn't opt out of the class claim settlement. So that means they're entitled to the extra 5% bonus on their earn claim. So 2 Bitcoin times the petition price, the 19,000 times the 1.05%. So add the 5% to that. That's how I got to the earn claim. So if they have 2 Bitcoin, their total cost basis is 110,000. So like I said, you're limited in the amount of loss you can take to your cost basis. So the most amount of loss they could ever take is 110,000. And that would be if they never got anything back. But as we know with Celsius, people are getting things back. So that's going to come down based on how much they receive. So in this person's case, they're going to receive Bitcoin, they're going to receive ETH, they're going to receive stock, they're going to have the illiquid asset recovery, and maybe something in the future. We have no idea. But based on the hypothetical percentages that we've got in the most recent court document, these are the numbers and how it's going to shake out with them. I also assumed here that in 2025, they're not going to get anything, but I don't know if they will. You might get something like, in 1 year from distribution. So if you get something, whatever the value of what you receive is, you need to add that to the capital gain amount. So I can give you an example. But in this person's case, let's look at the Ponzi column. You can take an $82,500 loss in 2023. So that, again, comes from 75% of your cost basis. So that's how we came up with that number. And then in 2024, they're going to receive the Bitcoin, the ETH, and the stock. And so, I'm assuming all three they'll end up claiming those in 2024 and have access to them. Because of what they receive is going to be more than the total loss that they've already recognized, they have a little bit of gain that they have to make up for there. So again, I can kind of go into how we calculated those, but they have a little bit of income they're going to have to recognize. And then I'm anticipating they get nothing in 2025. So in this case, they're going to have a total loss of $80,000, and it's like all going to be taken in 2023 pretty much. If we do capital, again, for capital, you do nothing for 2023. And then 24, they're going to have a forced liquidation of a portion of their Bitcoin for the ETH and the stock. They're also going to withdraw some Bitcoin, which is a non-taxable event. But the forced liquidation for the ETH and the stock will result in a loss of $29,747. And then the forced liquidation for potentially the illiquid asset recovery, and then also the portion that they never get, that's just completely lost and you're never going to see it, that's captured in the $47,000 loss. So that's this person's example. As we can see here, if they had $100,000 of income, I would totally recommend the Ponzi loss for them, because in both cases, the total loss is about the same. It's both, around $80,000. But in this case, they could take that $82,000 in 2023, almost completely offset their income. They're barely going to have to pay any tax this year. And then they'll just have, a little bit of income next year. It's not that big of a deal. If they do capital, they can only take $3,000 of those losses per year. So they'll take $3,000 in 2024 and then 26,000 is going to roll forward to 2025. That's going to get added to the 2025 number. They're going to take 3,000, and that's just going to keep rolling forward. But, if you have gains in either of those years, that could totally make a difference. So again, if you had a gain in 2024, that could be better. So we might want to file an extension and see how 2024 shakes out before deciding which category to take. But if you already know, like, I'm not in crypto anymore, I'm not going to have any capital gains, or I'm holding till I die, like, okay, then let's do Ponzi. But that's a simple way to kind of determine if you have a high cost basis on an earned claim. Okay, so now we have person B. This is the exact same, except for they have capital gains in 2024 and 2025, 50,000 per year. In that case, in 2024, they can use the full $29,000 to offset a portion of their gains. So now they're only paying $21,000 of capital gains, and nothing's rolling forward. They just are reducing the amount of tax they have to pay on their capital gains. The next year, 2025, they're doing basically the same thing. They're offsetting $50,000 of their capital gains, and they really are only paying tax on about $3,000 of capital gains. It would be more ideal to do capital, but that's also, we don't know what's going to happen in 2025. That's an unknown. So you kind of have to project a little bit there. And we're just barely in the beginning of 2024. So we don't know what's going to happen, but those are things to consider. Okay, and now we have person C. So this is the exact same thing. I just switched that last line to now they have capital losses instead of capital gains. This one, it's like they're taking L's left, right, and center. Like, they lost on Celsius. They're losing in their capital gains year after year. Like, I mean, we know this can happen in crypto. This actually isn't super unheard of. But if you are just taking all the losses, you should do the Ponzi, because you can use that Ponzi at least to offset your income. You're making $100,000 of income at least. So you can use that to offset that, but you do not want to keep adding. I mean, you already have $100,000 of capital losses between these 2 years that you have. You don't want to add another 76,000 to that. That's just going to roll forward indefinitely. I mean, I hope your investing is going to turn around, but it's not looking good for you so far. So that one, probably Ponzi. And then the next up is person D, which is just basically the exact same as the person we looked at previously, except for their cost basis is now $10,000 per Bitcoin. So if they have 2 Bitcoin on earn total, that's a $20,000 cost basis. And so these are kind of how the numbers shake out for them. So it is a forced liquidation at a low cost basis. And so in this case, if they take the Ponzi loss, but then they receive back more than what their low cost basis was, they're actually going to have a gain on the Ponzi side and a loss on the capital side. So on the capital gain or loss side, you'll see that they'll have a gain in 2024, and that's the forced liquidation of Bitcoin for ETH and for stock. But then in 2025, there's a big chunk of their Bitcoin that they never got back. And so that's where the loss comes from in 2025. So even though, if you're looking at both and you're like, oh, but in 2023, I could take a big loss if I do Ponzi, it doesn't make sense, because in 2024, you end up taking so much income. So in this case, I would just do the capital option there. Okay, and then here's another example. Let's do the claim is about the same. We saw in the previous example, the claim was about 41,000. So this person has claim, but instead we're switching it to link. And you'll see here that what's different between this one and the Bitcoin is that the total is the same, regardless of which one you do. And that's because nobody's getting a distribution of link, right? You're either getting a distribution of Bitcoin or ETH. And so if your claim is in Bitcoin or ETH, then it will be, a portion of it is going to be just a withdrawal, and that's not going to be taxable, and you're going to maintain your original cost basis. So a portion of it is not going to have a forced liquidation. It's just going to basically be a return to you. But in this case, all of it is being liquidated. You're not getting back any link. And so it's the same regardless. It's just the timing on this one. So if I was in this case, it totally depends on your personal situation. So in 2023, you're going to take a loss, but then you have like a big income next year. So the only case this would probably make sense is to do the Ponzi here is if you were anticipating a lot of income outside of crypto, like personal income this year, and barely any income next year. Like what if you like got a huge bonus this year, or you sold a company or something, then it's like, oh yeah, I'm going to do anything to try and bring my tax rate down. And it's like, oh, next year I'm not going to really have that much income. Who cares if I throw another 24 on there? So maybe that's a case for Ponzi, but probably not super common. So in this case, you're probably going to do capital gain or loss. But the rough thing is that because you had such a low cost basis relative to petition price, you're going to have to report a gain in 2024 for the forced liquidation at the low price. And then 2025, finally, whatever link you didn't get back, you'll have some sort of loss to take there. But that's, so many years away. That will be in your 2026 filing. So that kind of sucks. Okay, so next is same thing, but now they have the high cost basis. So this was similar to our very first one, the person A with the high cost basis on Bitcoin. So in this case, they're taking the same loss, the $81,000 loss regardless. It's just which one's better. So this is very similar fact pattern, and also like you would follow the same methodology on which one to take, because in this case most likely Ponzi is your best option unless you have big capital gains. And then this one is now, so we've talked all about the earn, and everyone that is on lend converts to earn at some point with their claim, but at least the treatment. But if you have 2 Bitcoin, same situation, high cost basis, but you have a $25,000 loan out against your Bitcoin, now we have a whole other issue here. Because as you know, if you didn't end up paying back any of your loan, which most people didn't, they're basically saying, okay, you have $25,000 of ours, we have 2 Bitcoin of yours, we're just going to sell a portion of your Bitcoin, you keep the 25,000. So it's a forced, again, sell of that Bitcoin. But the sucky part is they're doing the forced sell based on not on the price that you want it to be. So
yeah, loans, that is confusing as heck. That is just more variables for you guys to work through.
Yeah, it's a whole other thing and a whole other lovely part to my spreadsheet out there. So if this was your situation, you had high basis and a $25,000 loan against a 2 Bitcoin collateral, I mean, a portion of that Bitcoin is going to be sold for the 25K loan, and then the other portion of it's going to turn into an earn, the 15,000, I guess, in this case. So depends on how it's going to shake out, but this is a potential option of how your numbers would look if you had that. So in this case, it's probably better to do Ponzi unless you have, again, high capital gains. So, and then this is our last person. This is the exact same fact pattern as below, except for I changed the cost basis to a low basis, so $10,000. In this case, you actually can't even take a loss, because they're saying if your cost basis is, 2 Bitcoin, and your total cost basis is 20,000, but they're saying you had 25,000 of ours, there's no loss there. Like, I mean, obviously there is in theory, but like from a tax perspective, there isn't, because you've already received more than like what you had put in there from a cost basis perspective. So if you've pulled out more than what you had there as basis, then you can't even take a loss. So if your cost basis is lower than what your loan amount was, then no loan allowed. So sorry, you should just ignore that $10,000 in the 2024 column. That shouldn't be there. So in this case, your only option is capital. And because your basis was so low, you're going to also have, and you had a forced liquidation for 25,000 for ETH, for stock, and then also a withdrawal of Bitcoin. You're going to have a $15,000 gain, and then you'll be able to finally take a little loss in 2025. But because your loss is so low, or because your cost basis is so low, it's only going to be about $3,000. So in this case, you're forced to do capital. Don't look at the Ponzi one. But with lend, that's where it becomes different. There's, in some cases, you might not even have an option between the two. You can only do capital if you don't technically have a loss relative to your loan amount and your cost basis. And I guess I didn't even do any slides about custody, but I'll just speak quickly about it. If you had something in and then you just got it back, it's not a taxable event. It doesn't matter if it was in there for 2 years, 3 years, 1 year. If you get back what you put in, it's just going to maintain its original cost basis, its original holding period, meaning like the original date you bought it on. So it'll just be a transfer in and out, and it's not taxable. So there's only taxable events if there's amounts lost, or if you're receiving back a distribution that's not in kind to what you had. So if you're holding ETH and you receive back something else, stock, Bitcoin, cash, anything, that's when there's a taxable event. But if you're receiving back anything in kind, it's not taxable.
Got it. And for all y'all, we will be doing more videos. in the future. Because
I'm
yeah,
sure people have questions. So yeah, I'd love to answer anything that if you have questions, let's, send them my way, send them Aaron's way. We'll find a way to get it answered.
yeah, actually, before I upload this video for you guys watching, in the description, along with all the other links to reach out to Laura and her team, I'll include some form. I'm not quite sure how I'll do it, but some form you can just ask questions so I can keep them all organized. And then we will do another video, at least probably several more videos, because there's going to be, as more things happen, more things will need to be discussed.
Awesome. Look forward to it. Yeah. And I guess just in summary, what I would say is that there's so many moving parts and also so many unknowns, but we have some knowns now. So that's going to help us with our calculations. But I'm going to try and stay on top of, whatever changes, and through your videos, that'll help me, I'm sure. But Aaron has the links below to set up consultations with me, to email me, to somehow get connected with me. But also, I'm just going to create a page on my website. It's cryptotaxgirl.com. But if you go to cryptotaxgirl.com/Celsius, I'll have like the latest info there. So in case anything's changed, like Aaron said, we can do a video on it too. But just in case you're watching this 6 months from now and you want to see if anything's changed, you can go to the cryptotaxgirl.com/Celsius to see what has changed. And also, I mean, we're focusing on Celsius today. That's Aaron's bread and butter. But if you also had losses on Voyager, Luna, Terra, BlockFi, FTX, any of these other ones, it's a very similar process, but with different numbers. So we can also help with those. But we're going to focus on the Celsius right now. I'm sure they'll keep us busy enough.
All right, Laura. Well, thank you for coming on, providing tons of info. And I will include all the links to reach out to you and your team, including a link with a $100 discount if they decide to work with you.
Yes.
And there will be a limited amount of spots. You guys are very, very busy.
It's tax season. Everyone is. That's an accountant. Yeah, totally. So this is hitting at perfect time. Normally, if you would have emailed me today, I would say we'd love to help you, but we have a bit of a waiting list. So let me add you to it. But if you say, hey, I found you through Aaron's video and I need help with the Celsius stuff ASAP, I'll move you to the front if you're one of the first 50. So super excited to help everyone with this. I've been spending so much time on it, and I've just been helping my own clients who I've had for years who've been involved in Celsius, but I know there's so many more people this impacts, and yeah, I'm hoping we can just get this straightened out.
Yeah, so many questions have been coming in for taxes. So again, guys, all the links below. We will be doing more, and I'll have a link or a place for you to write down your questions as well. So
yeah.
Thank you, Laura, for coming on.
You're welcome.
Appreciate it.
Yeah, thanks for having me. Appreciate it too.
All right. See ya.